Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 2nd, 2025. I am Luna.
I am JPMorgan. Today we're diving into a pretty dramatic shakeup, the one that sent U.S. financial markets tumbling over the past 24 hours. Our mission here is simple. Quickly unpack the forces behind Wall Street's sharp retreat and, really importantly, what it means for you.
Yeah, it's fascinating because investors really got hit with a kind of 1-2 punch. We saw some extremely weak economic data hitting the headlines almost at the same time as the surprising wave of new tariffs got announced. That combination, well, it just completely wiped out the record highs we've been seeing.
Absolutely. And the market snapshot, it tells a very clear story, doesn't it? A broad retreat. U.S. stocks had their worst drop since May. The S&P 500 slid, 1.6%, Dow down 1.2%, Nasdaq plunged 2.2%. It really felt like a sudden sharp shift in mood.
Totally. And if you connect that to the bigger picture, you immediately saw this flight to safety. Gold prices jumped over 2% to around $3,361 an ounce. Interestingly, Bitcoin, which some people watch as a haven, actually fell about 1.5% to maybe $113,500. But the big story was bond yields. They just collapsed, particularly the 2-year Treasury. That's a huge signal the market is betting heavily on the Fed cutting interest rates soon.
Okay, let's unpack that first punch then. That July employment report, it seemed like a real shocker. What exactly made it so surprising? How did the numbers actually break down?
Well, the headline number itself was weak. The Labor Department said employers added only 73,000 jobs. That's far, far below what analysts expected. And the unemployment rate, it actually ticked up to 4.2%. That's its highest point in over a year. But, what was maybe even more alarming were the revisions to previous months. They cut a massive 258,000 jobs combined from May and June's initial reports.
Wow, 258,000 revised away.
Exactly. So that signals the job slowdown isn't just coming, it's definitely here now. And that really triggered the flight to safety we talked about. It also dramatically shifted expectations for the Fed. The market's now pricing in almost a 90% chance of a rate cut in September. That's a very rapid change.
Okay, wow. A huge shift. And then, well, this is where it gets really unusual, maybe even unprecedented. The president's reaction to that jobs report.
Yeah.
Pretty drastic, wasn't it? Can you walk us through the ousting of Erica McIntyre, the head of the Bureau of Labor Statistics?
Right. So President Trump responded pretty directly by firing her. He accused her, without providing evidence, of manipulating the data. He called the report dismal and reportedly told his team to fire her immediately. Now, this obviously raises serious questions about the independence and integrity of crucial economic data.
I can imagine. What was the reaction?
Strong condemnation, really. From economists, former officials, McIntyre's own predecessor called the firing groundless. He warned it undermines the statistical mission of the Bureau. And for markets that were already, nervous, politicizing data like this just adds another layer of uncertainty. It can erode trust, which is vital for stable markets.
Adds uncertainty indeed. And just as the markets were processing that, the second punch landed. Trade policy. A really dramatic turn here. President Trump signed an executive order putting steep tariffs on, 66 countries, plus the EU and Taiwan?
That's right. And the rates vary wildly from 10% up to 41%. Canada, for example, got hit particularly hard and jumped to 35% from 25%. Their prime minister quickly said they look to diversify exports away from the U.S.
So a big move. What's the market's immediate fear about these tariffs?
It's pretty clear. The fear is these tariffs will hurt corporate earnings by raising costs. They'll disrupt supply chains, which are still quite fragile in places, and they could fuel inflation. This combination just poured fuel on the fire of the stock sell-off. It creates these stagflation-like risks, rising prices, and slowing growth happening at the same time. That's the worst-case scenario for consumers, businesses, and, frankly, the Fed.
Right, the worst of both worlds. So given all this turbulence, what should we be looking for next? What data points matter most, and where does this leave the Federal Reserve? It sounds like a precarious position.
Definitely precarious. Key data to watch includes the upcoming ISM Services PMI that tells us about the non-manufacturing side of the economy. Weekly jobless claims, too, for a real-time pulse on labor. But the big one will be the July CPI inflation data, due mid-August. That's crucial, because the Fed is now expected to cut rates to support growth. But if inflation stays high or even rises because of these tariffs, well, that's a major policy dilemma.
A dilemma, got it.
Yeah.
So the market mood has shifted.
Oh, yeah. The bias is definitely cautious, defensive now. People are worried about that stagflation risk. So the major things for you, the listener, to monitor are Any further escalation in the trade war, any more, let's say, erratic policy moves from Washington, and just the general risk of a deeper economic slowdown than anticipated.
Okay, so to recap,
Right.
markets got hit by that 1-2 punch. Weak jobs data followed immediately by sweeping new tariffs. We should probably expect continued volatility in the weeks ahead, and the key takeaway for you really seems to be watching how incoming economic data interacts with the Federal Reserve's response. That interplay is critical.
Absolutely. And it leaves us with a big question, doesn't it? What does this mix of slowing growth, trade wars, and political intervention mean for your outlook on the economy? And maybe how might it reshape your own financial planning? Definitely a time to stay vigilant and, well, buckle up for what the next few weeks might bring. Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver days key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.